India is still the world's fastest growing major economy. So, why are economists suddenly warning of a sharp slowdown? Is it just about rising oil prices? Or is there a deeper problem with investment? Let's decode this from a UPSC perspective. So, hello everyone, and welcome to the latest update series of Mastura IS. So, let's discuss about the topic. According to Reuters poll, India's economic growth could slow significantly due to two major risks. Firstly, weak private investment, and second, a possible global oil price shock. These factors could reduce growth while increasing inflationary pressures. First, weak investment, the growth engine in losing momentum. Private investment is a key driver of a long-term economic growth. When businesses invest less in factories, infrastructure, and machinery, first, job creation slows, productivity growth weakens, and future GDP growth loses momentum. So here your UPSC keyword will be growth fixed capital formation GFCF. Second, oil shock, India's biggest external vulnerability. India's imports on over 80% of its crude oil recruitments. If crude oil prices rise, the import bill increases, the current account deficit CAD widens, and the rupee may come under pressure. Fuel and transport costs rise, leading to higher inflation. Third, the growth inflation trade off. Higher oil prices push inflation upward. To control inflation, the RBI may keep interest rates high. Higher interest rates make borrowing more expensive, reduce investment and consumer spending, and slow overall economic growth. This is a classic growth versus inflation policy dilemma. Then, um, from the UPSC relevance, this topic is important for JS papers third, Indian economy, economic growth, inflation, current account deficit, monetary policy, and energy security. Now, I have a mains question for you, a mains answer writing question for you. So the question is weak private investment and rising I repeat it once again. Weak private investment and rising crude oil prices pose significant challenges to India's growth prospects. Let's discuss. So this is the question. I hope you have understand. So this is the question for the topic. So and this you can see here. Wait a second. Wait a second. This you can see here about the diagnostic matrix index, sexual impact, where this is the aviation given and the extreme impact that the ATF forms 35 to 40% of operating cost. Then we have the logistics. So it explains the high impact and diesel moves 65 to 70% of India's freight. Then we have the FMGC. It is a moderate impact and rising transport and packaging costs led to shrinkflation. Then we have the agriculture. It has an indirect hit and fertilizer production cost rises linked to natural gas. So then this is a Russian pivot 2.0. Oh, sorry. Just a second. So this is a Russian pivot, you can see, by the way, and it is given about the Russia, where this is here a short map which signifies that from Russia and from to India. So the USA grant 30-day waiver for Indian refineries to buy Russian euros. The catch, the massive discounts of 2012 has been banished, and Indian refiners now pay a premium over Brent due to the high global communication and soaring war rise insurance costs. Now Then we have a synthesis there about the energy independence strategy. This is the strategic resource SPR, expanding underground gas at Vishakhapatnam, Mangalore, Pador, and currently 9.5 days capacity it has. Then the ethanol blending, aggressively pushing 50% of blending target to control petrol illness, and even transaction is there mentioned here. So at the last, wait. So at the last, I just conclude my words by just saying that India's long-term growth fundamentals remain strong, but sustaining high growth requires robust private investment, stable energy prices, and sound microeconomic management. Balancing growth with inflation control will remain one of the biggest policy challenges for India. So I hope you like the way of my explanation and you like the topic. So for further updates, you can join our Telegram channel. The link is mentioned below in the description box. So thank you so much.